An article in the British magazine The Economist has people talking on this side of the Atlantic. It says home prices in Canada are overvalued by at least 25%, and that prices here are even more overvalued than they were in the United States at the peak of that country's housing bubble. David Madani is an economist with Capital Economics, and he joins us now for a reality check on the Canadian housing market and what these numbers could mean for you. Good afternoon to you, David.
Good afternoon.
So what do you make of the Economist's assessment that housing prices in Canada are overvalued by as much as 25%?
Well, we think their assessment actually is, broadly speaking, pretty close to our own. Earlier this year to our clients, we outlined our general view on housing. We think it's substantially overvalued, and Vancouver is obviously the extreme example. And we do see a correction at some point in the not-too-distant future.
We often hear people, and have been listening to people for the past decade, saying we expect a correction in the near future. That correction, though, has not really come.
Yeah, I find, to be honest, a decade is a bit of a stretch, because if you had asked me 10 years ago, I would have said there wasn't a problem, because house prices are more or less in line with incomes. 3 years ago, I would be concerned. Today, of course, I'm even more concerned because we've seen house prices shoot past the previous peaks prior to the global financial crisis. I can certainly appreciate, though, the strength in housing sales and housing starts that we've seen just across Canada, generally speaking. And I think some people could be forgiven for thinking, well, what's the problem? Sales are strong overall. But, of course, I think what's important to keep in mind is that housing markets are like that. They're not light stock markets. Housing markets go for years during a boom, and then during slumps they go for years too. The strength in sales shouldn't be interpreted necessarily as a sign that everything is honky-dory. The big problem is the house prices. The level of house prices has risen well far above what anyone would have ever expected based off trends in income, immigration, population, interest rates, you name it. At the end of the day, it's going to be a very unhappy ending.
What's odd, though, is that in a place like Vancouver, where a single-family home, an average single-family home in the city, is now valued at more than $1 million, it tends to become the new normal. No one thinks that's unusual.
Yeah, that's exactly it. People just do the price comparisons and think, oh, well, that's what the market is. The problem, we think, is the market is behaving irrationally in terms of investment behavior. And it all boils down to just overly confident investment behavior. It drives up prices, and of course rising prices attracts more sales because the asset price is rising, and the buyer side becomes very crowded. But at some point, of course, prices can't keep rising relative to household incomes, obviously. And when that turn comes, and we think it's soon, then the market could suddenly look very different. And so at some point soon, we do think there will be a standoff between potential buyers and anxious sellers.
And you say sometime soon because they have reached the point? I mean, most people in this city would argue that they have reached the point already where they've become completely unaffordable and unsustainable.
That's right. The reason why now and not 5 years ago or 3 years ago even is because I think we've reached that threshold point. The sharp run-up in house prices has eroded the longer-term affordability picture. It's not sustainable. So we do think a correction is inevitable.
Sorry, I'm being a little Vancouver-centric here because it is a favorite topic of discussion in this city. If the bubble does burst, who's going to feel it the most?
I think the people who feel it the most will be those that perhaps have purchased a home recently and have very little equity in their property. So given the substantial declines that we're forecasting, this will obviously mean that some homeowners in Vancouver will be seriously underwater on their property. What I mean by that is they own a lot more on it than it's worth. And obviously that's problematic for things like mortgage refinancing. And in the more extreme case, obviously it raises the risk of foreclosure. But obviously there's a lot needs to happen in order to get to that point. Some people might need to sit down with their financial lenders and hammer out a solution as to the best way forward.
If there was someone looking to buy in a market like this, what would you recommend to them right now?
Well, I'm not allowed to give, legally speaking, financial investment advice, but I would encourage anyone, whether they're a homeowner or not, to sit down with someone they trust, financial advisor, and just have them look over their overall financial situation to make sure that they're comfortable and understand the longer-term commitment that is a housing mortgage.
I suppose sit down with someone who isn't selling you a mortgage would be a good idea.
Yeah, I would say someone that you trust.
There are, I mean, we talk about the losers in this. What could happen if the bubble does burst? Who wins if the bubble bursts?
Hypothetically, I suppose, it's the person who is perhaps renting, who has a fairly secure job, certainly a job that's not tied to what's happening in construction. Someone who, I guess, potentially is looking to jump into home ownership at some point soon. That's the first crop of people that come to mind.
As the Economist says, if the Canadian market is overvalued by 25%, would we see a drop of that size, or would it be substantially less than 25%?
Given the magnitudes involved in terms of the gap between house prices and income, we doubt that income growth alone can close that gap, and that's why some economists think that a price decline is inevitable. But of course, that only brings us back to average, like what we saw in the US, and I don't mean to use that as a case example per se, but the reality is you can also fall below average, and that's what we've seen in the US. But again, that's not a forecast per se, but clearly if something's above average, and it can also fall below average by definition. So the 25%, give or take, really just more or less brings us back in line with incomes. And obviously Vancouver being an extreme example, it's quite possible that the decline there could be more substantial than that 25%.
David, thank you very much. Good to talk to you this afternoon.
Yeah, sorry to be the bearer of bad news.
Thanks so much. Bye-bye now.
Okay, bye-bye.